Hello and welcome to another episode of Insurance in Canada. I'm your host, Rick Pereira. So glad you can join me. Today we're looking at three stories about insurance in the news. The first one has to deal with factors that may cause automobile insurance premiums to rise in the future. Second story comes from Alberta regarding changes to the rules there when it comes to trying to sue for injuries in an automobile accident. And our last story today is going to be involving travel insurance and whether Canadians, when traveling to other provinces and territories, really need travel insurance. So without further ado, let's take a look at insurance in the news. So our first story today deals with potential factors that may cause insurance premiums for automobile insurance to rise in the future, looking specifically at new vehicle prices as well as other factors. So obviously the main determinant when it comes to determination of premiums is going to be claims costs. And unfortunately, over the last few years, automobile insurance claims costs have risen quite significantly due to various factors. So let's take a look at this story. Rising new vehicle prices poised to drive up auto insurance premiums. This is from Josh Recamara. We see a lot of his stories, so one day I'm going to learn to pronounce his name properly. As the cost of new cars increases, insurers have warned that advanced tech, repair complexity, and supply chain pressures may soon hit drivers' wallets at renewal time. According to the latest Consumer Price Index CPI report from Statistics Canada, the cost of new vehicles rose by 4.9% year over year in May, up from 4.6% in April, while overall inflation held steady at 1.7%. The continued rise in vehicle prices is one factor that could lead to higher insurance costs for Canadian drivers. Newer models and electric vehicles tend to feature advanced technology, specialized parts, and systems that increase repair and replacement costs. Insurers factor these expenses into premiums to ensure they can cover potential claims, and that is correct. So many new features on vehicles, especially safety features, such as the ability to maintain distance when in cruise control, automatic emergency braking, all these sensors that's used to try and make driving more safe, unfortunately also cause the cost to repair these systems or cost to repair vehicles with these systems to be significantly higher than vehicles without these systems. So it's a bit of a trade-off when you look at it. These systems that are there to try and protect passengers and people outside the vehicles, as opposed to the claims cost when it comes to actually trying to repair these systems. It's not exactly balancing itself out. We're not seeing any overall decrease in claims costs because of these new features. So that's definitely one factor when it comes to the significant increase in claims costs over the last few years. Hans added, that's Matt Hans, the Vice President of Insurance at RateHub. Hans added that recent supply chain issues and rising labor costs are also contributing to higher claims expenses. In addition, U.S. tariffs on imported vehicles and auto parts are expected to affect Canadian repair costs as manufacturer and service providers pass these costs onto consumers. That's definitely another factor we have yet to see the full brunt of, since these tariffs are fairly recent. We haven't seen that translated yet into the potential to increase claims costs even further due to scarcity of parts because they have to be imported from outside Canada. Yes, we do produce many parts here in Canada, but not all of them are going to be utilized for vehicle repair. All of these factors are pushing insurers to reevaluate pricing, and drivers may notice the impact at renewal. Electric vehicles in particular are often carry higher premiums due to the high cost of batteries and the need for specialized repairs. Morgan Roberts, Vice President at RH Insurance, noted that while EVs can be more expensive to insure, they may qualify for discounts through some insurers due to their safety features and lower theft rates. A few of my insurers do offer green vehicle discounts. It's not a big discount. However, yes, it's true that EVs are not exactly high theft targets as opposed to your standard internal combustion engine vehicles. And the safety feature, sure, it's about the same as what you have on internal combustion engine and hybrid vehicles. The one downside when it comes to electric vehicles is the propensity for small damage to cause the entire vehicle to be considered a total loss. For example, I have an example here from British Columbia. This story is from December 2023, but there's many stories like it, not only in Canada, but around the world as well. So this is an electric vehicle owner. They owned a 2022 Hyundai Ioniq 5. They were in Kelowna when they noticed the vehicle was not functioning well, decided to tow it back to the dealership in Richmond, BC. Once the vehicle got there, he asked for a standard service. However, he says when the mechanics began working on his EV, they found scratches on the battery pack, the protective case underneath the vehicle that houses the car batteries, and a gap between the battery cell and the protection pack. So the battery pack itself, it's for most electric vehicles, it's going to be somewhere under the rear passenger seat. It's vary from vehicle to vehicle, but generally that's where it's located. Normally it's accessed from underneath the vehicle. It could be accessed from inside the vehicle, but if it is accessed from underneath the vehicle, even if it's not, there's going to be some sort of protective plate underneath the vehicle to protect the battery pack from any sort of impacts. In this particular case, it appears that there were scratches on the protective cover. So the owner, Jesus, doesn't know how the car, and you can see in the images in the article, this is the protective cover, and there's little bit of scratches here, and you can see some gravel embedded in the protective cover, and you can see some scratches here as well. The owner doesn't know how the car would have become scratched, saying the service department at the dealership in Richmond told him, "You must have run over something. They told me it was road hazards due to the damage." Jesus says his 8-year warranty was deemed void and the entire battery needed to be replaced at a cost of $30,000. Following the advice of the dealership, Jesus said he took his car to his insurance provider, ICBC, to see how much of the cost he could claim under his policy. However, a few days later, Jesus says he received a call from ICBC quoting him $60,000 to replace his car's battery, $10,000 more than the cost of the vehicle itself. He says he was informed by ICBC that a secondary Hyundai dealership in Vancouver quoted the insurance provider that the cost of replacing the battery would be about $50,000 plus labor costs and tax, bringing the total to $60,000. So he had no other choice but to have ICBC total out the vehicle for damage. If this was on a internal combustion engine vehicle that had these kind of scratches, say on the oil pan, that's an easy enough fix to replace the oil pan, but because of where it was located on the vehicle, it caused the entire vehicle to be totaled out for damage you wouldn't even notice if you were walking past this vehicle on the street. So yes, there's the increased safety factor, and yes, vehicle theft these days is a consideration, especially with insurance companies and determining which vehicles they want to insure and which vehicles they're going to surcharge for being a high theft vehicle. However, when it comes to electric vehicles, those chickens are going to come home to roost one day. The propensity of these types of vehicles being totaled out for relatively minor damage, it's one of these days the insurance for electric vehicles is just going to keep climbing and climbing and climbing as opposed to their internal combustion engine counterparts. You're seeing a little bit of it today, but I'm concerned about what could happen in the future, and I know the federal government is planning to ban the sale of new internal combustion engine vehicles. So how that's going to really impact the insurance industry when it comes to insuring all these electric vehicles is going to be a big question. To help offset premium increases, Hands recommend that consumers shop around, compare quotes, which is great for those consumers, vehicle owners that live in provinces with private insurance schemes, that they can shop around. But keep in mind, it's not like one insurance company is going to increase drastically and the others aren't going to follow suit. So you can try, but in the end, if you have a vehicle that's expensive to insure, it's going to be relatively expensive with all the insurers in your particular province. So other factors, there are other factors when we're looking at pricing of automobile insurance, but this is something to keep in mind in the future, because at this point, rates have not really stabilized in any province or territory across Canada. So it'd be interesting to see how this is going to affect the increasing rates we're seeing, especially in the insurance provinces with the private insurance schemes like Ontario, Alberta, Maritime provinces. Next up, our story from Alberta. Speaking of automobile insurance, an attempt for them to try and generate savings when it comes to automobile insurance. So right to sue could lower projected savings under Alberta's auto reforms, preserving a limited right to sue at-fault drivers under Alberta's Care First auto reform means the province's drivers might wind up paying an average of $136 more annually for car insurance. Insurance Bureau of Canada commissioned MNP to do a cost impact study of including a limited right to sue at-fault drivers under the province's proposed new no-fault auto insurance model. IBC released the results of MNP's report this week. Alberta has announced it's moving to the Care First model as of January 1st, 2027. Litigation in Alberta's auto insurance system creates significant costs for Alberta drivers, says Aaron Sutherland, Vice President of Pacific and Western Regions of IBC. Removing this to improve affordability and care is the main reason the government decided to transition to its Care First model. The provincial government designs and mandates the auto insurance products that the insurers must sell. No other province with a care-based system permits the ability to sue as envisioned in Alberta because of the significant costs it adds for drivers while doing nothing to improve care for those injured in collisions. Care First is a no-fault system under which Albertans injured in a collision will receive unlimited coverage for eligible medical and rehabilitation expenses, and income replacement limits will be increased. The ability to sue for damages will be limited to cases in which an at-fault driver is convicted of a criminal code offense. So impaired driving, dangerous driving, I think failure to remain at the scene of an accident is also criminal code offenses. An at-fault driver is convicted of select major Traffic Safety Act offenses. Out-of-pocket expenses exceed policy limits. So there's many provinces and territories in Canada that do limit the right to sue when it comes to injuries in automobile accidents, just as a way to try and limit the cases that go to courts to only the more serious cases, so to try and keep the minor injuries out of the courts and within the insurance system. So Ontario is such a province. Yes, you can sue for injuries you suffer in an automobile accident. You can sue for your lost wages. However, if you want to sue for your medical expenses or for non-economic damages like pain and suffering, there is a threshold that you have to meet in order to sue. If you do not meet that threshold and you can't sue for medical expenses and pain and suffering, you can still sue for your lost wages. However, that was something that could have been covered under your automobile insurance to begin with. So Alberta seems to be moving towards that same system, but the criteria for Albertans to sue for their injuries is different than what we have in Ontario. Because in Ontario, if you want to sue for your medical expenses and your pain and suffering, you're either have to have died, so it'd be your estate that's suing, you have to suffer a permanent serious disfigurement or a permanent serious impairment of an important mental, physical, or psychological function. So that is the verbal threshold. Alberta's going with a different system where it's going to be incumbent upon the at-fault party to be convicted of some sort of offense in order to be eligible to be sued, or that your expenses are going to exceed what's in the policy itself. Carrying on the article, Alberta says the new system will lower average annual auto insurance premiums to $815. As of August 2024, BrokerLink reported Alberta drivers could expect to pay an average of $1,578 per year for car insurance. Extrapolating from NMP's report, the Alberta government is assuming an average annual car insurance premium of $1,204 is projecting its Care First model will result in average annual premium savings of just under $400. I kind of question that offhand, just because we're up above. It says that Albertans injured in a collision will receive unlimited coverage for eligible medical and rehabilitation expenses, and income replacement limits will be increased. So I don't know of any province or territory in Canada that offers unlimited coverage for medical and rehabilitation expenses. Definitely here in Ontario, no, it is limited. There are options to increase the limit, but there always is going to be a limit. The last jurisdiction I can think of that offered unlimited coverage for medical and rehabilitation was the state of Michigan. However, they did away with that about 3 or 4 years ago because the costs associated with providing unlimited coverage, it got to the point where Michigan became the most expensive state to insure a vehicle. So I don't doubt, I know they hired, was it Oliver Wyman or MNP? I'm not familiar with MNP. I have no reason to believe that they are not good at what they do, but just from what I've seen personally in those jurisdictions that have gone with that unlimited model, the costs, the accident benefits costs associated for medical and rehabilitation can really get out of hand. And now the insurer is going to be on the hook for years and years and years of medical rehabilitation costs. Yes, I understand some people's injuries are that severe that they require that, but for less severe injuries, without capping those eligible expenses, the accident benefits coverage, I can imagine, is going to, the premium for that particular coverage would probably increase quite significantly. Sure, there might be savings by limiting the right to sue, so you'll see bodily injury under third-party liability be decreased. I'm not sure if you're really going to see an overall decrease, a greater decrease in the bodily injury premium as opposed to the increase that you'll see in the accident benefits, but I guess time will tell. So it doesn't take effect until January 1st, 2027, so be interesting to see a year later how it's working out for Alberta. However, MNP notes this assumption is based on a purely no-fault model that does not include a right to sue at-fault drivers for breaking the law. Okay. The Alberta government projects potential savings up to $389 per driver. Those estimates are based on a study by Oliver Wyman examining a transition to a privately delivered model similar to that used by Manitoba Public Insurance. Manitoba's auto insurance system does not provide the ability to sue at-fault drivers following collisions except for property damage. Permitting tort, as envisioned in Alberta's Care First model, will have negative impact on potential premium savings. An expansion of tort access could reduce the premium savings for drivers. So yeah, Manitoba, they're trying to model Manitoba's system system, but Manitoba's system is that you cannot sue for your injuries that you suffer in an automobile accident. So that's the big difference between Alberta's future model and Manitoba's current system. That's that one particular detail that's rather important that may mean that the savings that they're anticipating may not come to fruition. It depends how many tort claims would be made under the limited tort provision. MNP notes there are no reliable stats for how many people sue at-fault drivers who commit criminal code or traffic safety act offenses. It also notes the potential impact on savings would depend on whether the ability to sue would apply to the full range of criminal code offenses or a more limited subset of them. For the purpose of its analysis, MNP assumed between 2,685 and 3,585 tort claims annually against drivers who commit offenses. It also assumes the ability to sue would be restricted to a limited number of criminal code and traffic safety offenses. Under these scenarios, MNP reports Alberta drivers would not be paying $850 for car insurance per year, but rather the $947, an increase of $132 based on access to tort under the Care First model. IBC is calling for the Alberta government to course correct on its proposed model, eliminating access to tort altogether, which is a rather extreme thing to do. Other provinces have done it. Quebec, Manitoba, I believe Saskatchewan also has a plan that Saskatchewan drivers can purchase where they're not allowed to sue for their injuries for higher accident benefits. I'm not sure if that's still in Saskatchewan. If anyone from Saskatchewan likes to comment on that, just to confirm that. So whether Albertans are ready to embrace that system of not being able to sue for their injuries, I'm not sure about that. And I think that's something the government of Alberta would have to tread lightly when it comes to that, and really maybe even put that to a referendum to see if the citizens of Alberta want to go that route. But like I said, time will tell. And our last story for today, while travel insurance is still vital for trips within Canada. From Josh Recamara. With school holidays approaching, many Canadian families are planning domestic trips to destinations such as Vancouver, Toronto, and Halifax. However, new data from CAA South Central Ontario suggests that a significant number of Ontarians are traveling within Canada without travel insurance, potentially leaving themselves exposed to unexpected costs. According to a national travel survey conducted by CAA, 41% of Ontarians reported traveling outside their home province without insurance during their most recent trip. Among those respondents, 43% said they believed travel insurance was unnecessary for domestic travel. 24% cited concerns about costs. 20% said they simply hoped nothing would go wrong. So those 43% that believe travel insurance is unnecessary for domestic travel, that's not accurate. Your provincial or territorial health plan does not cover all expenses when you are traveling outside of your province, but within Canada. For instance, for British Columbia, I found this particular document. Who put this up? It's the government of BC, indicating physician services. If you present your valid BC service cards, most physicians in other Canadian provinces and territories will bill their provincial healthcare plan for their services. MSP, which is the British Columbia health insurance coverage, will then reimburse the other plan. Items and services not covered outside BC: prescription drugs, the big one being ambulance services. I know of no provincial healthcare plan or territorial healthcare plan that will cover ambulance services for services outside of that province. And that seems, like I said, I haven't seen any province that will cover that. That seems to be universal across Canada. Services of a nurse practitioner, physician assistant, services of a nurse anesthesiast, home care services, midwifery services, massage therapy, physiotherapy, chiropractic, acupuncture, naturopathy, podiatry, optometry, orthodontia. But those services, except for orthodontia, most of those services aren't exactly emergency medical services. So I don't think that's what most people are concerned about when we're talking about emergency medical expenses. So for the vast majority of expenses that you be incurring in a medical emergency, still within Canada but outside your home province, those would still be covered, but you still have these expenses that would not be covered. And also keep in mind, if you are traveling to Quebec from another province, Quebec has not signed on, I believe, to the interprovincial agreement to pay for hospital services for citizens of Canada from outside that province. So if you experience a medical emergency in Quebec and have to use the medical services in Quebec, you will have to pay for those services and then submit the costs to your provincial health insurer. If it was in another provinces, no. Your provincial insurer would pay the hospital doctor's office for those emergency expenses being incurred by their citizen. So this is why you want that travel insurance within Canada, especially if you're traveling to Quebec. Because if you have that travel insurance, most travel insurance plans will cover the costs so that you don't have to pay out of pocket and try and get reimbursed. Obviously, it's Quebec you're most concerned with, but the other expenses that's not listed, for instance, in the BC plan, you see that this is Newfoundland and Labrador. It's pretty much the same types. The cost of medical transportation, medical assistance, and other healthcare services outside Newfoundland and Labrador can be significant, may not fully or even partially covered by MCP, that's the Newfoundland and Labrador healthcare plan. Even within Canada, travelers are strongly advised to obtain additional insurance for these services from a private insurer prior to leaving the province for any length of time. So once again, even as an example from a maritime province, it's pretty much the same thing. Certain expenses would not be covered under the plan. So that is why travel insurance is so critical. Now, keep in mind, if you have a travel insurance under your extended healthcare plan from your employer, then that extended healthcare plan travel insurance should cover you for travel within Canada as well. So obviously, most people think about the coverage for going outside, traveling outside of Canada. But like I said, that plan should also cover travel within Canada as well. So you may already have that coverage and not even be aware of that. So you may want to speak to your HR representative from your company to confirm that, because if you are, bonus, you're good to go. However, if you do not have that coverage, once again, you may want to seriously consider getting this type of insurance. Many travel insurance companies like CA Insurance, Blue Cross, TD Insurance that does travel, have a separate plan for traveling just within Canada. So it's a much more affordable plan than an international plan or an international plan that includes the United States. Those can be rather pricey, but very necessary. Most of these companies already have a separate plan for if you're just traveling within Canada. So have a look at that before you travel, because like I said, you don't want that kind of surprise being held over your head should an emergency happen to you or one of your loved ones that you're traveling with. Caitlin First, Director of Corporate Communications at CASCO, said that while many Canadians assume they are fully covered under their provincial health plans when traveling within the country, that is not always the case. Whether it's a medical issue or a trip disruption, insurance coverage can help travelers manage unexpected expenses. The report noted that some emergency services, including ambulance transport, prescription drugs, like we just saw with BC and Newfoundland, may not be covered or reimbursed in full when incurred outside the traveler's home province. In cases where individuals must return home early due to emergency, insurance can also help with additional transportation costs. Yep. Orion Travel Insurance, part of CAA Group, noted that the average cost of medical claims has increased by approximately 15% per year. Trend reflects the rising prices for a range of services, including air ambulance and routine medical. The findings come as more families choose to explore domestic destinations over international ones this summer. While the risk may seem lower, the survey suggests that having insurance in place remains an important consideration for any type of travel. And truer words have never been spoken. If you have a story about incurring medical expenses while traveling within Canada, that may have been covered, may not have been covered, feel free to leave it in the comments. Your story may convince somebody else that spending the money on travel insurance for travel within Canada may be worth the time and effort. So that is it for me for today. I want to thank you for joining me. If you like what you see here, please like and subscribe for more content in the future. Until next time, I will see you later. Bye-bye.